Welcome to the Deep Dive, where we really get into the details. Today, we're looking at something huge but often invisible, the world of business-to-business, B2B transactions, and how tech is just completely changing it. Our focus. IndiaMART InterMESH Ltd. They call themselves India's largest online B2B marketplace. Big claim.
Yeah, it is. And for this deep dive, we're working from their investor presentation for Q1 FY26. That's the quarter ending June 30th, 2025. Plus, we have the independent auditor's report for that same period. So, pretty solid sources giving us a good look at their operations, financials, and where they're headed strategically.
Right. So our mission today for you is to really unpack what makes IndiaMART work, how they've been performing recently, and what their game plan looks like going forward. And honestly, get ready for some numbers that might surprise you about the scale we're talking about in B2B. Okay, so let's unpack this. Their core mission is simply make doing business easy. Sounds good, but what does that actually mean day to day, and how have they sort of evolved?
Well, at its heart, it's about moving businesses away from the old Rolodex and trade show method, the manual discovery, towards finding partners online, anytime, anywhere. What's really interesting is how they do it. It's a multifaceted approach, a two-way discovery marketplace, basically connecting buyers and suppliers.
Okay, so it's more than just a directory listing then.
Oh, absolutely. Much more. Their whole model is built on subscriptions, and crucially, they operate with negative working capital.
Ah, negative working capital. That's pretty efficient, right? They get paid up front.
Exactly. It's very efficient. They use algorithms driven by user behavior to match the right buyer with the right supplier. And they've built up these really strong network effects. The platform becomes more valuable the more people use it.
Makes sense. And are they really as diversified as they seem, covering lots of industries?
They really are. The company spans 56 different industries, features something like 119 million products listed.
119 million. Wow.
Yeah, across nearly 98,000 categories. You can literally trace, say, the whole supply chain for building a water treatment plant just on their platform, from raw materials to the finished thing.
That really puts the scale into perspective. And this is where it gets interesting for you, our listener, if you're thinking about just how big this operation is. Let's look at their Q1 FY26 numbers, the operational ones, standalone.
Okay, so for the last 12 months ending that quarter, they reported 43 million active buyers.
43 million buyers.
Yeah. And on the other side, 8.4 million Indian supplier storefronts, plus a massive 121 million live product listings. And they're still adding paying suppliers, about 1,493 just in that quarter. Brings the total paying suppliers to around 218,000.
That is a huge ecosystem. What about actual interaction? Are people using it actively, the engagement numbers?
Oh yeah, definitely. They clocked 29 million unique business inquiries in Q1 FY26 alone, and managed, get this, 152 million replies and callbacks through their CRM and chat tools in just 3 months.
152 million interactions.
Right. It just shows how much activity, how much commerce is actually happening constantly on the platform.
So we see this huge operational engine. How does all that activity translate into the financial results? Let's look at the Q1 FY26 consolidated financials.
Okay. Revenue from operations hit 372 crore rupees. That's a solid 12% growth year over year. And deferred revenue, remember, that's customer advances, money paid up front, reached 1,735 crore rupees.
Right, that deferred revenue number, that really underscores the subscription model and customer commitment, doesn't it?
It certainly does. It's, future revenue already banked, essentially. Shows stickiness. Profitability-wise, their EBITDA earnings before interest, taxes, depreciation, amortization was 134 crore. That's a 36% margin, also up 12% year over year.
Okay.
But the net profit figure really jumped. It hit 154 crore, which is a 33% margin. And that's up an impressive 35% year over year.
Wow, 35% growth in net profit. That's significantly faster than the revenue growth.
Exactly. That suggests strong operating leverage. They're becoming more efficient at turning revenue into actual profit. Oh, and collections from customers also grew, 430 crore, up 17% year over year.
So these are strong numbers. How does the subscription model actually work in practice? You mentioned tiers earlier.
Right. It's an ROI-driven model. They have a freemium offering, so basic listings are free, which draws people in. Then they have paid tiers, silver, gold, and platinum. And the difference is significant. For example, their top 1% of paying suppliers generate an ARPU, annualized revenue per paying supplier, of roughly 1,059,000 rupees.
Over 1 million rupees per year from the top tier.
Yeah, while the top 10% average around 317,000 rupees. The overall average ARPU across all paying suppliers is about 64,000 rupees. Different tiers also get different benefits, like the number of RFQs, requests for quotation they can respond to. Platinum suppliers might get 30 to 100 weekly credits, whereas a basic silver annual subscriber gets just 10.
So clear incentives to upgrade. Now, this raises a key question. How have they kept evolving these offerings? What's their strategic outlook? They can't just stand still.
Absolutely not. Their innovation history is quite telling. They introduced RFQs way back in 2009, then cloud telephony in 2010, price discovery in 2013, more recently AI chatbots in 2023, and even photo search in 2024. So constant evolution. Their vision seems to be moving beyond just discovery. They talk about enabling full commerce, things like invoicing, inventory management, maybe even facilitating credit down the line, becoming indispensable, really.
Right, embedding themselves deeper, and that ties into their investments, doesn't it? They've put a lot of money into accounting software. Why that area specifically?
Yeah, that's a big strategic push. IndiaMART sees accounting software as a, quote, business necessity. It has high customer stickiness, businesses don't switch easily. Plus, it's a large growing market, and crucially, it fits perfectly with their own subscription revenue model. So lots of synergy there. They've invested around 715 crores, that's 7.15 billion rupees in the accounting space.
Okay, can you give us the specifics? Which companies are we talking about?
Sure. The big one is Busy Infotech. They own 100% of it, invested about 508 crore. They also own 100% of Livekeeping Technologies. That was an 87 crore investment. And Busy seems to be doing well. Its Q1 FY26 revenue was up 57% year over year, hitting 24.5 crore. Net billing was up 64% to 53 crore.
Strong growth there, too.
Yeah. And interestingly, about Busy's 74% of its licenses sold historically are in North India. But North India only accounts for about 35% of India's total businesses.
Ah, so huge potential to expand geographically within India itself.
Exactly. Significant room for growth in other regions.
Okay, so accounting is key, but they haven't stopped there, right? They've invested in other business enablement services, too. What else is in their portfolio?
Right. They're building out a whole ecosystem. They've got stakes in logistics, FleetX Technologies, and SuperProcure. That makes sense, connecting the digital listing with the physical delivery.
Yeah, closing the loop.
Definitely. Then there's B2B e-commerce itself with IB Monodoro, DIY accounting tools like Simply Viapar apps, invoice discounting platform M1 Exchange, even digital identity verification with IDFi.
ID verification, that's interesting.
Yeah, and distribution management with Bizom, HR Tech with Zimyo. It's quite a spread. The overall strategy seems clear. Build a comprehensive suite of tools and services around that core marketplace to help businesses run better, making IndiaMART indispensable.
Makes sense. Okay, let's shift gears a bit. Let's talk about the foundations, corporate governance, ethics, sustainability. What stands out there?
Well, they definitely emphasize having strong principles, transparency, accountability. They highlight their board composition, 60% independent directors, which is good practice. And they have multiple ISO certifications. These aren't just, pieces of paper. They represent real processes. ISO 2170001 for privacy, 22301 for business continuity, 31,000 for risk management, 20,000-1 for IT service management. It suggests robust systems are in place.
And has this been recognized externally? Any awards or accolades?
Yes, quite a few, actually. Things like Best Business App, a Gold Award for Best Enterprise Product, Most Trusted B2B Online Marketplace, and also Excellence in Corporate Governance. Their founder and CEO, Dinesh Agarwal, was even named Digital Person of the Year at one point.
Okay. Beyond the governance structures, what about their environmental and social impact, especially for a digital company?
Right. Well, the digital nature itself helps. It reduces travel, reduces paper waste, so it inherently contributes to decarbonization. They report a very low carbon emissions intensity, just 0.03 TCO2e per million rupees of turnover. That's tons of carbon dioxide equivalent. Pretty efficient.
Very low, yeah.
And they have a LEED Gold certified corporate office, which points to energy efficiency. They also actively promote green products on the platform, about 1.9 million of them listed across 800 categories.
And on the social side?
Socially, they make a point that they've served 8.1 million suppliers free of charge. That's over 95% of all suppliers on their platform benefiting from the freemium model. They also empower buyers from smaller cities. 47% of buyers come from outside the major metros, and they offer free assistance to buyers. Plus, they mention community initiatives impacting over 1.2 million lives, focusing on things like skill training for youth and improving school infrastructure.
Okay, comprehensive. Now, we should also touch upon the auditor's report again, BSR & Co. LLP gave a clean opinion, but there were some nuances, right?
Yes, that's important context. The auditors gave what's called an unmodified opinion, which is clean. It means they believe the financial statements are fair and accurate in all material aspects. However, they did note that for the consolidated results, they relied partly on reports from other auditors for 4 subsidiaries and on management-certified unaudited info for 8 associate companies.
But critically, this didn't change their final opinion.
Correct. They explicitly state their opinion was not modified because of these factors. It's a standard disclosure in complex group structures. The report also mentioned contingent liabilities, potential obligations like some disputed income tax and GST demands, and a Supreme Court ruling related to Provident Fund contributions. But management stated they believe their stance on these is strong, or the amounts aren't material, and they are contesting them. Standard stuff for a large company, really.
Got it. Okay, so that brings us pretty much full circle. What an incredible deep dive into IndiaMART. It's really clear they're building much more than just a marketplace. It's this whole ecosystem aimed at enabling businesses.
Absolutely. That blend of digital tools, the strategic investments we talked about, and this focus on both the financials and the broader ESG picture. It paints a picture of a company trying to embed itself very deeply into India's B2B fabric.
So wrapping up, what's the key takeaway for you, our listener? Maybe consider this. How could this model, digital enablement, adding services, strategic investing, how could that change B2B interactions elsewhere, especially maybe in other emerging markets? And looking ahead, what other kinds of enablement might platforms like this start offering? And how could that ripple out to affect wider economic development or even sustainability goals?
Definitely something interesting to think about as we watch the future of commerce unfold.